Is the real estate market going to crash? Some predict it will be the worst housing market crash of our generation, while others predict it will be the worst of the decade, which will still be terrible, but not as bad. Hello and welcome to Financial Fluence. In this video, I'll give you an update on real estate regarding the biggest housing market crash. Let's now get going. Declaring it so would be equivalent to saying that today is the worst day of the month, which should still be considered a poor day, but not the worst day of your life. I'll show you the data, and then I'll explain how I interpret it. We're awaiting October data, which should arrive over the next several weeks. So we'll base our decision on the most current data, which is September. October just finished. Examine home prices in September 2022 and early 2022. I want to make sure you understand this because there are so many variables to consider. Not to mention the media's sensationalization reports that home prices are falling by 7% from their summer peak, but are still up 7.5% from the beginning of the year. Let us agree on the same terms so that we can compare like with like. People are simply cherry-picking information to best support their story based on the time period, which is why various statistics are mentioned. Prepare for the most severe housing market collapse in a decade. Since supply and demand are the only two things that affect home prices, the main reason for the drop in demand is the current situation. Property values nationwide fell by 33% from their peak following the previous Great Recession. People will blame mortgage interest rates because the housing market dropped 7% during the crisis and the 30-year fixed rate is higher. Can you believe the distinction? Interest rates were last this high more than 20 years ago. Let me tell you about the harm that higher interest rates are causing. Mortgage applications are down 42% from the same time last year, the lowest level since 1997. Existing home sales have fallen for 8 months in a row. Existing home sales are now down 22% year over year. I've already demonstrated that home prices are declining from their summer highs. I'd like to stress that when I say home prices are down 7% from their peak, I'm referring to the national average. The largest US metro areas with declining housing values from their peaks are San Jose, California, down 10.7%, San Francisco, down 8.5%, Seattle, down 8.2%, Denver, San Diego, Portland, Vegas, Phoenix, and so on. According to some, the house next door has shrunk by 25%. Keep in mind that these are averages. This is each state's most recent migration data. It is said that many people are still attempting to flee California. Tell us what's happening in California if you're there. Numerous immigrants are also moving to Texas and Florida. And before we continue, don't forget to subscribe to the channel, hit the like button, and turn on the notification bell to be notified every time a new video is uploaded. Let's return to the video now. For a moment, consider the supply side of the equation. Over the past year, the number of homes for sale has gone up by 3.7%, which shows that new homes aren't flooding the market. I marked the location of supplies a year ago, and they are still 30% lower than pre-pandemic levels. Many people want the housing market to crash because home affordability is unsustainable. But let me explain how that works. The housing market will not collapse if demand exceeds supply. Don't be a slacker about it. If you want your crash to fall off a cliff, demand or supply must surge. Yes, as evidenced by the data, home prices will fall from their peak because demand is declining, but not rapidly enough. The supply is going up, but only at a rate of 3.7% per year, which is not enough in a market where demand is going down and supply is going up only slightly. Look at these statistics on home prices sold above list price. They've dropped dramatically compared to a year ago, and it's all reflected in the data. It's simple economics. If you want the real estate market to crash, either demand or supply must fall, or both. We are discussing unprecedented foreclosures. There were 2.9 million foreclosures in 2010. It got so bad that even Obama admitted the housing market was in shambles. Obama stated that it would take some time to absorb this far too large inventory, implying that he was referring to excess supply at the time. As I mentioned a few minutes ago, there are currently 1.7 million homes for sale and 2.9 million foreclosures in 2010. Imagine that all of those foreclosed homes hit the market, causing the number of homes for sale to go up and the housing market to crash. Tell me how many foreclosures occurred in the previous year. In 2011, there were 151,000 foreclosure filings, compared to 2.9 million in 2010. This year's foreclosures are expected to be in the 200,000 range. So we know that the supply will not come from foreclosures, right? It's also unlikely to come from home builders, as the number of single-family home groundbreakings fell by 8.1% in September compared to the previous year. Instead, a crash will occur from the demand side, causing demand to evaporate. The only way that will happen is if interest rates continue to rise or if there's a massive unemployment. But when you look at the economy now, it's still adding jobs. You could make the argument that the majority are low-quality jobs with decreasing real wage growth, which I wouldn't argue with you on, but it's still enough to pay the mortgage, keep the house from being foreclosed on, and get by. Because the economy is shaky, we now have mortgage interest rates above 7% for homeowners who locked in a 3% mortgage rate prior to 2021. So who are these buyers who are still buying homes to avoid a real estate market crash? The average age of a home buyer in the US is 44, but buyers range in age from 30 to 50. People who fit that description are the ones who are keeping the real estate market from collapsing. It depends on your point of view as to whether this is good or bad for you. They are typically married or in a partnership with a college education. Furthermore, 40 of them have children under the age of 18, and the following is a breakdown of dogs, cats, and other pets. So I know a lot of people have predicted a housing market crash. People are predicting a 50% drop in real estate prices. The Great Recession caused the problems we're seeing today. Our problems with inflation, money printing, and the Fed behaving stupidly started 15 years ago, unless you want to argue that it started in 1971, which I can see, but we're not going there. Finally, experts forecast what will occur in 2023. The current exchange rate is used to calculate this. According to Wells Fargo, home prices will fall 5% next year, 7% according to Morgan Stanley, and 5 to 10% according to Goldman Sachs. I'd say 10%. Plus or minus a few percentage points, and remember that the Great Recession saw a 33% drop. So it'll be bad but not catastrophic, like the worst day of the month. I recognize that this information is important to many people, particularly those who plan to buy or sell a home in the near future. So I try to avoid scare tactics unless they are justified, which they are not at the moment. And that's all. I hope you enjoyed this video. If you enjoy similar stuff, check out my other videos. And if you like it, hit the like button, subscribe to the channel, and turn on the notification bell, and I'll see you in the next video.